It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Welcome back to Trading Stocks Made Easy. It's Tyrone Jackson, the wealthy investor. So happy that you can join me. Episode 228, Investments That Grow. Now, you've heard me if you've listened to all 228 episodes of the Trading Stocks Made Easy podcast. We've talked about so many things, and sometimes I bring in students who are very successful to share their experience and, most importantly, share their shift in mindset. Today, I thought I would take a few minutes and educate you about investments that grow. That don't look like investments, but that's what they are. So when someone starts a new business, right, generally they're going to make two types of investments. Investments using capital, money, and investments using time, right? And then we'll kind of circle back to the stock market, and I'll share with you some of my most treasured thoughts on why I like stocks more than, let's say, a pizza shop or a dental office or a chiropractic practice. Okay, so let's say I come up with $50,000 and I decide I want to open a pizza shop. Now, I personally might not know how to actually make the pizza. I may know something about the oven, temperature, where to get the ingredients, and a standard menu of a pizza shop. Now, wherever you go across this country, there will always be a pizza shop. Why? They're proven money makers. If you can get your pizza shop in a high traffic district or part of town, guess what? You really won't have to spend that much money on advertising because people know pizza. It's a product they're familiar with, and there's a high likelihood that they're going to come and sample your product. So pizza restaurants throughout the United States are kind of proven, but it still takes capital. I've got to find the space, I've got to find the ovens, I got to get the tables, the chairs, and someone to run it, usually a manager. Why am I doing all this? Well, the obvious thing is to say, well, Tyrone's Pizza, let's call it that. I should actually get that domain, tyronespizza.com, but that's another thing for another time. I'm putting up $50,000. Why am I putting up that $50,000? Well, I got to build out the place, sign the lease with the landlord, have heating and cooling and electricity and internet, and most importantly, a telephone and promotional material. Everything that I've put into Tyrone's Pizza is a financial investment. What am I hoping to make as a result of putting up that $50,000? I'm hoping to make $350,000 in annual sales, minus all of my expenses, so that I have something called a net profit. Now, I'm going to give up a lot of my time because I probably have to supervise the build out, get the contractors in there, the electricians, and then I have to decorate the place and make sure that it is fully functional. But all the while hoping that I get a rate of return on that $50,000 that I put up once, I can get a salary out of it, et cetera, et cetera, et cetera. So if my first shop, Tyrone's Pizza, actually makes $250,000 in gross sales, do I get to keep the entire $250,000? And the answer, of course, is no. A, I have to pay my employees, state and local taxes, and for the materials. And maybe after all of that, I may have, if I'm lucky in the first 52 weeks of business, $100,000 to pay myself. Now, if I can keep that pizza shop going and I'm into year 2, I've paid myself $100,000 a year or $200,000. You see, it can always be viewed as what's my rate of return on a $50,000 that I put up once, $100,000 in the first year, another $100,000 in the second year. I have my own business. I may not be rich because I have to pay taxes on that $100,000, but I've set up a machine that is self-sufficient. Well, if I'm trying to get richer, then I need another $50,000 to open another shop in another part of town or another town altogether, so that I can, instead of taking in $100,000 and pay, maybe both shops are doing well, I am now at $200,000. boy, if I can set up one more shop, I technically have a franchise, a brand that people know in this part of town, that part of town, and maybe in the next town over. So there's a reason that you see all of these pizza shops in your town, in your city, is because as a business, pizza is proven to produce a profit. Now, what would happen if I were a dentist? Well, I just graduated from dental school. I have my license to practice. I'm going to find a middle-class suburb to set up my dental practice. Same principle, except rather than $50,000 for the pizza shop, I need $150,000 to start my dental practice. Because you see, my dental practice requires a lot more equipment, a lot more state regulation, a lot more filing, and a lot more build out. Plus, I also have to have a staff to help me run it. So I'm going to need more capital than I am for the pizza shop. But the dentistry practice, instead of making $250,000 in gross sales, my dental practice has a shot at $900,000 in gross sales. Why? Because I'm not just waiting for people to walk in off the street. I am also billing insurance companies. And I can bill more in my dental practice than I can selling pizza. Not so bad. But let's say I get really, really, really lucky, and in my first year, my dental practice makes $900,000 as a result of my $150,000 investment. Are you with me? Right. I don't get to keep the entire $900,000 because I probably have 1, 2, or 3 staff workers who are essential to run that business. But maybe, just maybe, if I'm good with the numbers, good with the marketing, maybe I can walk out with $250,000. So if I put up $150,000 and I walk out with a salary of $250,000, if I'm really, really lucky in my first year, I'm doing well. But you see, I'm not your average dentist, Tyrone'sDentist.com. I'm not your average dentist. I have plans to open another office, and I get extremely lucky within 2 years, and the office that is number 2 produces the same result. Now I'm walking out, instead of $250,000, it's $250,000 per office, and I'm walking out with $500,000. But you see, that $500,000, the rate of return off of the initial figures that I put up. But see, I'm not the average dentist because I find another dentist like me and we think about opening up 7 other offices so we each can walk out with $1 million and have a dental practice. Now, these examples that I've just given you sound fictitious, but these are actually people that I know that have done this. So within 2 or 3 years, that dentist has 10 offices. They make over $1.2 million. They don't even have to go to work because the entire machine is working for them. That individual with 1 pizza shop now has 6 pizza shops and is now earning $600,000 a year because they built a brand. So sometimes when I'm talking to people, I say the difference between a millionaire mindset, right, and a worker bee mindset, trading time for dollars, is that the person trading time for dollars doesn't have the vision to say, I'll duplicate these stores. They're happy just with 1 store. Now, I used to say millionaire's mindset, but now I'm going to talk to you about a billionaire's mindset. What would a billionaire do? Instead of building 1 pizza shop, they would build 50. Instead of having 1 dental office, they would have 75. All in the state of California, in the state of New York, Florida. They would look to something bigger because they could then take that franchise and sell it for $700 million. And they make a plan. They say, I'm going to do all of this, and I'm going to sell off this entire brand within 7 years, and I'll walk with $700 million. I'm only working for 7 years, and then I'm done. Do you see the difference? Some people have a mindset that allows them to think in terms of millions of dollars, and others have a mindset that allows them to think in terms of billions of dollars, or at least 750 million because you sell the whole franchise off. Well, that's fascinating, and those are wonderful illustrations, and for some people, they're a great way to make a living. What we actually do in the stock market is we take that $50,000, we have no build-out fees, no pizza ovens, no staff, and we get a rate of return on that money, frequently explained as a cash-on-cash return. No matter what we do with excess money, we're trying to get a cash-on-cash return. Whether it's a pizza shop or a dental office, we're trying to get a rate of return on the money that we put up initially. When you invest in the stock market, no staff, no state regulations, no build-out, no rent. And is it possible to get a higher rate of return on your $50,000 just investing it in the stock market as opposed to opening a bricks and mortar business? The answer to that when I come back.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
Welcome back. Now, one of the things I'm talking to you about today is this idea of investments that work. We know pizza shops historically do really well. It's a product people are familiar with, and they love pizza around big sporting events like the Super Bowl. We also know that dental practices do really, really well, but the community in which they serve usually has to be upper or upper middle class because those are the people who have the disposable income and spend the money on braces and good dental care. And they also have health insurance. So historically, there have been some investment in businesses that are known to produce predictable rate of returns. Now, if we look at the stock market the same way, there are some stocks that have done very, very well over time. Technology stocks like Apple, which create new technology and sell it to us as consumers and also as businesses, has done very well. That's why Apple is a member of the Dow Jones Industrial Average. What other sector outside of technology has traditionally done well? The auto sector, right? Although we're going into a period where we're making transitions from gas-powered cars to electric-powered cars. Okay, so this EV market is going to be really, really huge. There are some things that have to be worked out, but we know the auto sector historically has done very, very well. I personally don't like the auto sector as much as I like technology, video games, credit card processing, because I see the long tail effect of those businesses. In other words, credit card processing, for example, is never going to go away. In fact, we have 3 billion people on the planet who own a MasterCard, which is incredible to me. And this is all according to MasterCard's last earnings released. So what I like about investing in the stock market is I don't have to run those businesses. I just have to understand how they make money, both on the top line of their balance sheet and the bottom line. I also have to understand as an educated investor, does this company actually pay a dividend or not? That means I have a financial education and I know how to assess a company's financial health. I might not know how to market the business, how to run their TV campaign or Instagram campaign, but I'm a member of the public, I own shares, and I could read directly from the CEO how they grow the sales. One of the things I really love about investing and trading in the stock market is you get to see the same patterns over and over and over again. So, for example, we just added in the Wealthy Investor Program a company called Uber Technologies. Because in 2023, you know them as Uber, right? The the pickup and drop-off service, right? But they have 4 sectors that are growing right now, and it looks like they have a lot of running room. And I just read the report this morning, and I looked at the stock and the size of the float, and the in and out of the money call premiums. And I said, this gets added as a member of the Wealthy Investor trading platform, which I explain about in Trade School. By the way, if you haven't started a membership to WI Trade School, what are you waiting for? WI Trade School is sort of kind of like Netflix for stock market traders. When you go and you start your membership there, it's hard to leave. I post brand new videos every single week on companies and how to trade them, what's best for your retirement. And best of all, instead of just listening to me here on the show, you get to send in your questions and I answer them every single week. So if you already have a Trade School membership, great. This episode is going to make itself into Trade School, where I list the best of the Trading Stocks Made Easy podcast, our most successful podcast that people love. It's in Trade School. They're waiting for you. Take advantage of that. Okay, so what I love about investing is I don't always have to go out and do the work. I let other people do the work. That's what shareholders do. We profit from smart CEOs, marketing managers, and people who work in corporate America. The only difference is we're home trading their stock for a cash-on-cash return. Now, I'm going to tell you, I met someone at a party about 5 years ago who's very wealthy, and he was a chiropractor. And what he did was he had a vision to not only own one chiropractic office, but to own 50 of them by the time he was 35, because his plan was to sell them all off or sell at least half, be able to cash in on a brand that he created, and have $20 million cash halfway through his life. Needless to say, his wife agreed with this plan, and today he is very, very wealthy. Now, sometimes when people have a financial education, they've been taught how to invest, how to start a business, when to buy the business, and when to cash out. They ultimately take that excess cash and they go into the stock market and some version of real estate. So when my chiropractic friend reached his goal and walked with $20 million, he took some of the money and he invested in a huge house, and he took some of the money and he invested in the stock market so that he could leverage other people working to grow a business. You see, there's no shortage of the amount of money you can earn in this lifetime. You just have to decide with your millionaire mindset how you're going to do it. Some people do it through real estate. Some people own a business. Some people have the combination of everything. This is why I thank you constantly for listening to the show, because even if you and I never meet, your consciousness grows in some way, shape, or form. You have to learn how to think bigger, bigger, bigger in your life, and how to have a little bit more vision for yourself so that you can take care of yourself and the people that you love, because you've learned how to invest. Now, what was interesting about my chiropractic friend is, remember when he went out and he bought that big, big house? He said, I'm going to sell this house when my kids graduate from college. I said, well, why are you looking so far down the line? He goes, well, I bought this house for $2 million. I'm hoping that in 20 years, it's worth $6 million. I will sell it and move into a $2 million house. That's the power of having a financial plan, because he knew he wanted to be financially free for the rest of his life. Now, he did keep one office for himself as a chiropractor because he really did love what it was he did, and he loved his patients. So my question to you is, what is your financial plan? Are you going to start a business on the side, something small that's proven, like cleaning up people's yards, or Christmas lights, or a cleaning business, or a business where you go to people's houses and you actually have people who wash their cars? Where I live in Malibu, that is an extremely profitable business, because rich people really don't ever want to have to leave home, because we pay for services that are exclusive to us. So you could start a small business right now with very little capital and grow that business to $50,000, $60,000, even $100,000 just in your community. What would you do with an extra $100,000? What could you do with an extra $100,000 from your side business? You could, of course, invest it in the stock market in sectors of the marketplace that you actually like. You know, when you listen to this show, not only do I want to inform you, I also want to inspire you and educate you so that you make bigger and better financial moves. Now, for me, there's only but so many businesses I want to own because I actually like staying at home and getting a cash-on-cash return. Now, I say that, but the reality is I do own a few businesses where I find myself being very active. But what is the goal? More income, more cash-on-cash return. It's 2024. You can have a bigger, better life than you even imagine when you have the right mindset. And when you're ready for bigger returns on your money in the stock market, make sure you start your membership at WI Trade School. It's a great way to continue your financial education. Hey, listen, that's going to do it for me here on this episode of Trading Stocks Made Easy. If this episode has helped you think new thoughts or see a few things in a different light, then you and I are on the right track. I'll see you next week right here on the next Trading Stocks Made Easy.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.